All right, this is Jeff Scott. Welcome to this week's webinar for 7/8/2018. We'll get futures first read sometime in the middle of this. It's 5:42. This should be about 50 minutes before my wife yanks me out to dinner. I entitled today, What Me Worry? And I was thinking back about Mad magazine, whatever it is, when we were growing up. And but really, it's how I look at the market. So let's go ahead and start. So, disclaimer: this is for education purposes only, and recommendations in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent, which means no one pays me anything to say good things about them. I paid for all the tools I demonstrate. Trading involves risk. You and you are solely responsible. Any stock suggestions I make are purely for education. I talk a lot about options. I refer you to the Options Industry Council. I think options are a great way to trade, but I recognize that many people smarter than me think they are high risk and you need to be forewarned. I always call out those people that influence me. Many of them are listed here, ranging from William O'Neill and Cancelim, his disciples Morales and Catcher, Ian Woodward, who really took it to HGSI and really taught me how to understand markets and how to trade. Ron Brown, who in the later period of time became Ian's partner. My buddy George Lee from Canada, a great speaker who I get to share the podium with every once in a while. Van Tharp, the king of money management. John Person, who has become a great friend, but this is a decade after I bought his indicators. Started reading his books, been to his seminars, and he really taught me not only how to figure out the market and what to buy, but when to buy and when to sell and how many to buy. Sort of building upon what I learned from Van Tharp. And then Sager with Superior Profit. And if you go to the Discord board, you've had an influence of Sager's too. He's really a smart man. I like what he does. And some of his signals and the way he looks at the market has also helped me make money. And that's what this is about, folks. It's not about how many programs I own or how many you own. It's how do you make money and do you make money? If I had to cut it down, I need TradeStation or Thinkorswim. HGSI is where I do most of my analysis, EdgeRater, which supports it, and then I do occasionally talk about seasonality and some of those other sites. Speaking of highgrowthstock.com, here is the website for HGSI. I point out a free 30-day trial, as well as if you click on investing strategies, you can get hundreds of videos by Ron and I at no charge, which we hope will help it make it easier for you to get something out of the program. Stocks are cyclical, and I feel like a broken record. Every time I think the market's going to roll over, we take another leg up. It's like we went to the top of this picture, dissected the top third, and it's kind of like, feels like we're in a Darvas box. And every time we hit and look like we're about to drop below, we bounce up and go back up and test resistance. We are, I think, 160 days, something I saw, a lot of days from the highs. So even though the markets have been strong, we are still well below the earlier highs of the year. So this week feels like a bullish week, but more of that to come. I adjust how I approach the market, and if I'm believing that this is a bullish week, then you'll see me taking bigger positions, buying stocks, calls, selling puts, doing some bull put spreads. When I'm bullish, I don't do covered calls. I know that a lot of people find that that's when the premium may be the best on your calls to sell. But so I put it in yellow, but I do recognize that it's a viable strategy. I always like to look at the markets, and this was how we ended on Friday. And you notice it's pretty much a sea of green. And it's kind of an interesting week or day when utilities are green, which is defensive, but everything else is green too. In fact, there was even some green in financials, and financials have been weak for quite some time. Perhaps we'll talk about with the yield curve flattening and the impact there might be. Retail strong. I'm not even going to point out what's strong and what's weak because everything was strong on Friday. Thursday and Friday were two great days for the bulls. We'll see if it carries through. Now let's jump into Thinkorswim and let's take a look at these major markets. I think we can see it better here, and let me enlarge this. And there's a couple things I want to point out, so it's worth going into my Thinkorswim charts. First of all, up at the top are labels that most of these were created by Bob Meager, one of the HGSI guys, and he's just been wonderful and shared much of his work with the rest. But so you can see strength on up bar on the E-minis. So it's a lower left up to upper right. You can see the highs of the year did occur in January. So even though we've been in a uptrend, this is after we pulled back deep into February. The lows of the year were in February as well. So the highs of the year, 28.78 on the E-minis occurring at the end of January, and the low of the year, 25.29. I've joked before that right before the highs of the year, I cashed out some positions and bought a boat. Timing is everything. You know, it was a good time to take profits. So it just reminds me of the importance. In fact, this is almost kind of like it's a coiling within a limited range here. It looks like we moved up. This is a PPS buy signal. Volume is strong. This is the E-mini futures. On the NASDAQ futures, a similar pattern, although the high of the year occurred actually. We recently hit the high. This is back in June. So the NASDAQ better performing over the last several months than the E-minis. And you notice a fresh buy signal, pull back to the 50 and a takeoff. And those that follow me know that's one of my favorite signals to look at. If I look here at the YM, the Dow futures, again, peaked early in the year, January 29th. Low of the year, which was down over almost 400 points, was February 6th. That was a hell of a week, wasn't it, folks? And you could see held at the 200 with a new buy signal on Friday. The Russell, like the NASDAQ, has outperformed of late, the high of the year being in June 20th, the low of the year occurring. Actually, I need to add some more bars on this one to give you that answer. So I want 6 months daily, 3 months daily. I'm not going to go back. Oh, there you go. The high of the year just occurred in June, the low of the year back in that February 9th time frame, and they had a buy signal come in on Thursday. If the markets are strong, you'd expect the VIX to be weak, and you can see the VIX is not as low as it was earlier in the year when it was back in the 10-12 range, but it has pulled back into the 200-day moving average with the sell signal. Bearish, an effort to fall is the reading up there. And then lastly, if we look at the dollar, a weak dollar would probably be good for our markets, and the dollar has come back, and that may support a further rally. So that is the daily, I believe. And now just to very quickly pop in the weekly view. And I'm not going to break out into individuals because I think the story is easy. E-minis, lower left, upper right since October, even with the pullbacks in the market. On the weekly high being in January this year, but you can go back here since 16 and see a nice uptrend in E-mini, NASDAQ futures. Notice pullback into the 50-week or 17-week on the E-mini, 17-week on the NASDAQ. The Dow pulling back to the 50-week and bouncing. The Russell ETF, the IWM, is actually stronger. And you can see here in the weekly, the VX has come down, and the dollar has failed at that 200 multiple times. All right, so back to my slide presentation. Yes, I'm going a little faster today. I have to. And then I don't talk much about Genesis here because to me it's better. It's great for futures. The point of my Genesis, if you look on there's 3 rows here, daily, weekly, and monthly. The columns are the E-minis, the NQs, the TFs, the NYSE, and the YMs. And the point is that when you look at the monthly charts, you are in a big uptrend, choppy on the daily, choppy on the weekly, but new buy signals, the green triangle popping up on the daily and the weekly, so strengthening markets. Now let's talk about some of the information underneath the surface. Rates have been falling. This is sort of bizarre to me because isn't the Fed tightening? So is there something out there that is looming? Is it the trade deficit or the trade war rather? Is it the debt? Is the economy not as strong as we think it is? Something is causing rates to fall. Now the falling rates are meaningful because falling rates are good for REITs, MLPs, utilities, and dividend payers, and they were strong this week. Home builders strengthened at the end of the week as well. Rising rates are good for banks and insurers. They were weak because of falling rates. Now you're hearing a lot. So let me tell you about this curve, this chart. You're hearing a lot about the flattening yield curve. So I decided to do some investigation and look at some charts that I had. On the top is everywhere from a 3-month, 6-month, a year, 2-year, 5-year, 10-year, 20, 30-year of the bonds and what their interest rates are. And the absolute number doesn't matter. It's how they compare to each other. That's what we're looking at. If we look at on the bottom in blue, which is hard to see, this is the difference between the 2 years and the 10-year. When the 2-year and the 10-year come together, it's hard to see it here, but trust me, they came together. You will see a bottoming of the yield curve. When it goes below the 0 line, it's inverted, and the 10-year rates are actually higher, or lower rather, than the 2-year rates. So we get that straight. Yes. So with the rates flattening, everybody is going to talk about, excuse me, I say it again, the 10-year rates are typically higher than the 2-year rates. And when the 10-year rates drop below the 2-year rates, that's the inversion. So if we get a flattening of the curve and we're heading towards the 0 line over here in blue, everybody's bearish because of that. If you look at the last several times that we went back to a flat line here, you'll notice that the market didn't fall when we went flat. It fell when the Fed started tightening and rates started going back up. So we are going to flatten. It looks like we're going to flatten, but just because we flatten doesn't mean automatically that the market will fall, because in pink we have the market, and you could see we went flat where my arrowhead is here, and the market kept going. So the market does fall ultimately, but it looks like it ultimately falls when the rates start to go up. So we'll have to see. AD lines leading the market higher, both 2000, Russell 2000, Russell 1000. And if I look in here, the NYSE is the dark white line. Up at the top, everything moving up this week are the diamonds, the Qs, the spiders, the IWM, and the IYT for transports. Interesting, this week the Treasury bonds, the TLT, actually turned up. Usually it's been going against the market, but with the market turning up at the end of the week, but weak in the beginning, perhaps that explains it. Breadth, how many stocks above the 200-day SMA on the left, the 40 SMA on the right, right in the middle. So it's improved, which means the markets are getting stronger, far from overbought. 3-month new high, new low. You see a red star. Red is not a good color in Jeffrey charts. We are up at the top. So if I had to look for a reason to be concerned on Monday or Tuesday, is that we are at a level that the market likes to reverse. So I'm going to pay attention to that, recognizing that it could be sideways as much as anything else. But we had a big move up in this at the end of the week. So that's a damper a little bit. You're not quite up to the 100% reversal line, but you're getting very, very close. The McClellan, everything is rising with price on the daily and the weekly, no divergences. Don't really see anything here that jumps out and shouts at me. The buckets, taking all the stocks in the S&P 1500, putting them in their Bollinger Bands, and looking how many are above or below the midline. 58% above the midline. This is a big move this week. That is bullish compared to last week. And only about 12% of the stocks are above their Bollinger Bands. That goes a little bit with that red arrow of the stock starting to get extended, but it's a small percent. When it gets to 20 or 30, that's a reversal indicator. So we have room to go on the buckets. We look for HINDYs to give us evidence, a Hindenburg omen of a impending market doom and gloom. And you can notice that there has been no Hindenburg since the 621 Hindenburg that occurred on the NYSE. And you'll notice that these two columns, new highs, new lows, that we've now dropped very low on the new lows. The new highs are starting to go up on both the NASDAQ and the NYSE. That is a bullish indicator. Another red star is the Woody indicator has not gone all green. So it's not all clear, guaranteed going higher, folks. But yellow beats red, so it's in the right direction. The red star there, just so I remember, it's not all green and go. And then you'll see some improvement in the sector strength, and it looks like utilities, technology, and healthcare all improved. Now, What's missing and what's lacking here is the financials, and that's something that was funny. The market started out okay on Friday, and Kramer said, if only tech and financials will join this rally, we'll have a great day. And they turned around about the time he said something. Those who follow me know I put a lot of credence into some synthetic indexes. This is the Canary Index. I know Google's called bookings. Assume I checked; it's already fixed in the chart. But takes the leaders of the stock market, including Tesla. Maybe I should take Tesla out. My chart will look better. And you can see we're poised to break out to new highs, is my guess. We're sitting right at the 17-day moving average. Interestingly, the leaders of the last run-up, those stocks that I picked on January 21st, which peaked about a week later, they actually are consolidating below the 50, so significantly weaker. Goes to prove the point or suggest the point that what led on the way up the last time doesn't necessarily lead this time. Know your news and earnings dates. I haven't really looked deep into this, so let's see what we see here. On Monday, we got some auctions. We got Fed head speak. That's always interesting. On Tuesday, we got some jolts. On Wednesday, we've got Atlanta Fed business expectations, wholesale trade. We've got some energy numbers at 10:30 and a Fed head speaking. On Thursday, again, a bunch of Treasury bill, more Fed heads. And on Friday, we've got some consumer sentiment and jobless claims also on Thursday and CPI on Thursday. So the ones with the red dots, and this comes from Econoday, here's the reference down there, are the ones that are likely to move the market. PPI also on Wednesday. Earnings season is starting up again, folks. So banks are heavy this week, both regionals with Ozark, super regionals, and PNC. First Republic, more of a regional, but the big guys, Citi, Wells Fargo, and JP Morgan. We also got the first airline, Delta. We have to hear all the impact of rising fuel. As I've said before and say again, it is a judgment call to do the analysis and make a decision to hold the stock over earnings date. It is just bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. We started the second half of the year on an up note. That's good. Market continues to climb while worry about digesting economic reports and at least Friday ignoring trade wars with China, EU, and the rest of the world. Biotech jumps on positive Alzheimer's data from Biogen IDEX, while Big Pharma takes off on a broad-based healthcare rally. Major markets have bounced off key support with new PPS buy signals, while the VIX and US dollar have fallen. I've heard so many pundits this weekend call a bottom that I'm a bit nervous. However, I found the most bullish patterns in a long time. My buy list is large and dominated by biotech, oil exploration, specialty apparel, and then those dividend plays of telecom, REITs, MLPs, etc. So despite some short-term volatility, I'll also tell you that my long-term analysis suggests higher highs by end of the year. Here is my green box chart that I refer to, and when I'm in the green box, meaning my price of the S&P 500 on the weekly chart is above my spread of moving averages, that the moving averages start little and end big in the right order versus what they did in 09 when they reversed. And my MACD lines are above zero. That is the green box, and that is my long-term buy signal. And more on that if you come to my live meetings. The fact that the histogram has just turned positive further accentuates why I'm still long. Now, I look at other things. I look at major markets, and I look at, these are the 10 and 15 monthly moving averages on the Dow Jones, NASDAQ, S&P, and IWM. And as long as the green's above red, I'm happy and long. This is a shorter term way where I look at, this is the NASDAQ, and I look at it on, this is using AbleSys. Blue is good, red is bad, green is chop. And I can look at it in multiple time frames. I put this up here for a simple reason. Which chart would you most like to trade? Do you want to trade a chart that had a buy signal at 8 in the morning and was done at 12 and be a day trader? That's a 5-minute chart. Do you want to be whipsawed on the 60-minute and the daily chart? Or do you want to take a position and hold it for a long time like the weekly and monthly charts? This is a NASDAQ monthly chart, which has not gone red. since April or June of 2009. Anybody who had bought the Qs, Ts, and A, any leveraged long-term play, was able to stomach these choppy areas that had no sell signal, would have seen their fortunes dramatically increase. One of my employees actually did that. I put this here to remind you, don't ignore long-term charts on indexes and on stocks. So now let's jump into the markets and take a quick look at where the futures have opened. All right. So it looks like the futures have opened up a little bit positive here. Green is good. It's early. They're not moving much. Notice the E-minis have turned positive on the weekly in my trade station modeling. Let me go fix this. Sorry about that. The NASDAQ. Maybe one more time. Let's try this one. The NASDAQ turned positive. These are on Friday. The Dow turned positive on Friday. The mid caps turned positive on Friday. And I haven't looked at the dollar, but I'm going to guess it's turned negative on Friday. So some things to like. It's early. We had a big run on Thursday and Friday. We are getting extended, at least by the new high new indicator. So be careful. But not much to talk about on futures. I go into HGSI typically at this point, and when I'm in HGSI, what I usually do as part of my top-down review, and again, I'm going to limit this today in time, I got about 20 minutes probably before I stop, is I go down to what I think most people have today, which is market analysis user groups, major market plus, hit warehouse view, and my 24 markets pop up, and that should include the IWM. Let's make sure it does. All right. Now I want to rank them by price and volume. Most of the way it will be 1 day, a little bit 1 week, and just a little bit 3 weeks. And I want to rank it by raw count. And when I see biotech, NASDAQ, small stocks, NYSE, NASDAQ 100 on top, I know I had a big week and I made some money. Hopefully last week you made some money too. It was a good week to be long the market. I just want to show you something. Just one of the things that I do, it's a thing in HGSI that I find very valuable, is called the GPA. In school, my GPA determined whether or not I got into med school, like I use that anymore. And I like to compare myself. So black is good, red is bad. A couple of these things had no stock picks this week, so these two don't count. So the first thing I look at is where's the S&P 500? Looks like the S&P 500, at least from end of day Friday to end of day Friday, was 1.52. That's a pretty major week. I want to make sure I'm above that. I was 1.75 on just the names of the stocks I hold. And then I look at where's the market Smith was up 2.32, IBD 50 was up 2.82. All that is great. My filtered buys were up 1.3. My overall buys were flat, even though 24 to 11 winners. What I want to do is make sure that I'm in the right direction and that growth is leading and I'm a growth player. You can tell how this was a turnaround week because the stocks that I looked at as potential shorting candidates, all 10 of them went up for the week and were up 3%. That's not unusual. On super strong weeks, sometimes the stocks that got hurt the most the week before are the ones that lead. So that's kind of interesting, but I wasn't going short, certainly Thursday and Friday on anything. Hard week to go short because even though the market had some swings, it wasn't until the end 2 days that swung in the same direction. Now let's take a look at the S&P 500. I know we've already looked at the indexes, but this is what I do, and I'm not going to initially change. Hold on a second. We'll just go to a daily now. Get out of this view. And so S&P 500, we've been talking about this for a couple of weeks. clearly in a big uptrend. This was in April when it had held at the 200, pulled back to the 50 here, broke out above the 17. Short term, this looks to me like it wants to go higher, so I'm bullish on this. The Dow Jones Industrial, not as strong, sitting on the 200, but I'd rather be sitting 200 with the green bar going up than the other way around. I'm a little nervous about this, but my guess is it's going to go higher with the rest of the market. The NASDAQ has been strong, and you can see here breaking above the 17-day pullback to support. Had a kahuna come in on Friday. If this was a stock, that was a buy signal on a stock for me. And the Russell, you could see a similar pattern. We talked before that the dollar seems to be weakening, and to me that's important because it seems to go the opposite way of my stocks, a lot, especially some of the commodity plays. And you can see the dollar still above the 50 on the daily moving average. But if I was to look at a weekly moving average, I have to move this because of a Snagit thing. It's struggling at the 200 on the weekly. Now the futures are actually below the 200. That's just a little anomaly of the difference between the futures and the cash traded ETF. The VIX, love to see that down on the bottom of my list because that means volatility has come down. It was lower in 17, but it's about as low as it's been this year, and certainly looks like it wants to go lower. At the dollar's week, did gold pop up this week? Well, it popped up, but it's still in a massive downtrend. It's hard for me to get excited by gold. Silver is just as bad. And then gold miners have been a little bit better, but still pretty weak. At least gold miners are above the 200-day moving average. Markets feel strong. If I go to industry groups, hit warehouse view, now I populate with my industry groups. I've got 174. Let's take a look at 2-day force and see what's leading. Feel like a broken record the last couple of weeks. It is oil, gas services, biotech, oil exploration, semis. That's great. Internet, application software, specialty pharma, e-commerce, telecom, infrastructure, REITs. So a couple things stand out. Oil, gas, exploration. Those are commodities. They're benefited by the price of oil, also by a lower dollar. Healthcare has been strong with biotech this week. Specialty pharma. Number 13, large pharma is also strong. Integrated oils, number 23, also look good. And then semis starting to make a move back up after they had been relatively weak. I'm just going to do something I don't normally do. I'm going to hit the ranking module. And the ranking module gives me a sense of what the performance was week to week. And it compares it raw relative strength. Let's see what I'm comparing to. Probably the S&P. That's relative strength. Let's go to all right, that's fine. It's looking at the relative strength over 6 weeks moving average. And you could see that over this period of time, oil and gas was strong, was weak, strong, weak, and is coming back strong. You could see consumer electronics have been strong for some time. That biotech has actually been strong since April, as has medical equipment, healthcare, supplies, specialty pharma, oil exploration. So you could actually look at not just 1 week. Now, one thing that Ian used to do is sometimes he would go back here. He would change it to percent change. Let's look at 1 week percent change. And let's just go here. And you could see looking at how much moved the top 20 last week, oil, gas, etc. These are the percent change. I think the equipment is because of Seadrill had a reverse split, so it's a mistake. And I look for what's been green a lot and for a long period of time. And you can see this is the story of the market. It's been very choppy. Now, if I look at relative strength and I compare it to, say, the S&P 500, let's drop it down to a 1 week. Let's see what that looks like. You can see that oil, gas services have stood out. So there's a lot of different ways in HGSI you could chop and look at things. Now I'm looking at the clock. I got about 12 more minutes before I'm going to have to say goodbye. What I typically do is right click, change index group, actually, and you can see here that the index is on top of all the stocks. And the problem with oil and services, we'll look at the first three, is Seadrill hasn't been corrected in the program. That's something that George needs to fix. I believe there was a reverse split. This wasn't the stock that went from 2 to 20. I think it was a 1 to 10 or 1 to 15 reverse split. So that gave all kinds of funny signals. Schlumberger and Halliburton are the big boys. And maybe it's a time to buy them with price of oil going up and energy producers going up. They've got earnings, but they certainly have not shown anything yet. That this is Halliburton. So not too exciting. I've been playing with Ensico. It looks a little bit better than the others. It doesn't look that great. And I just go through the top 10. Second one down is biotech. Now, last week, I called out Celgene and Regeneron. One of the lows of biotech is that news. And it turned out that on Thursday night, some data was released that Biogen IDEC and somebody else had some very promising results for Alzheimer's. Imagine what that product would be worth, what you would pay for that. Had a Bible gap up. Tough to play this after it's moved so much, although if the product is real, the stock goes to 600. So I didn't play that one. Gilead, a lot of people are starting to look at the future. When I see 3 out of 6 days getting a kahuna, breaking above the 200, mobile breakout from a squeeze, this is something that might be a value-based play to look at, and maybe it's going to be good, but technically, I'm not ready for it. Now, this is what I am ready for, and I talked about it last week. Celgene broke above the 50 with a pocket pivot, had 2 kahunas, one on Thursday, one on Friday, mobile breakout from a squeeze. The weekly bottom was green. Its growth rate is now equal to the multiple. I'm ready to buy more Celgene. I think Celgene makes sense here. I have been out of Celgene for quite some time until last week I was talking about it. Regeneron, I mentioned last week, maybe the week before, has started itching its way up as well. It's got earnings coming in greater than its multiple. I think Regeneron goes higher as well. Amgen's got a nice breakout here. Not as excited by its earnings prospects. Vertex talked about a couple weeks ago, so this was likely to break out. It broke out on Monday. The one that I bought, I think I picked it up because I read something on our Discord board. I was trying to remember what's it called. Hold on a second. Yes, you're going to see my numbers. I coach you every week. This was 1.2 last week, so about 170,000 up this week. So I would say it was a good week. Araquel, that was the one. I had a position in this, and it had a nice day last week. I think I picked this up around $5 because of the Discord board. And as you could see, it had a big move on Friday. So something's going on in biotech. You could be playing the ETF LABU. Oil exploration and production. I like Parsley, so we're going to look at that. A lot of these have been in sideways moves, waiting to see. Concho, $140 stock, below the 200 great earnings per share growth. Probably would pass on that one. But I was more interested in Parsley, broke above the 50. Great earnings per share growth compared to multiple. I like this one. A lot of them just look like ConocoPhillips. They're in the upper part here. They're just consolidating. I'd like to see this break out with some conviction. I love the earnings per share growth. I don't especially love their dividend. Marathon's another one, the same exact picture. Sitting on the 50, give me some momentum. I'm going long, but I need the momentum first. Here is Matador breaking above the 50, a little bit more momentum there, perhaps. Going down my list, the next one down is semiconductor devices, and AMD just looked outstanding on end of the week, and you can see it having a big move on Friday, pocket pivots, kahunas, mobile breakout, good fundamentals, although it trades at a big PE. It's about as high demand and supply I've seen, which just show people are accumulating it. So AMD was the best of the bunch here. NVIDIA sideways consolidation. Intel. See, this is the rest of the group looks a lot like this. They're consolidating below the 50. It'd be nice to see them move up because that would be good for the market. Continuing on, internet media, right click, change index group, Facebook. Who would have thought? I remember maybe it was March, watching it dive, and I've got a fairly substantial position. Do I sell? What do? I held on to most of my position. It hurt for a few days, and now it's back above 200 at all-time highs. Gotta like Facebook. Facebook's going higher, although it wouldn't surprise me for there to be a pause. Twitter, give me some momentum, a flag, and a breakout. This one looks strong as well. Baidu sitting on the 200. And I also like Google here with some momentum coming in and breaking above its 17-day. So I told you there was a lot to buy this week, or a lot to like. Application software, I like Momo. That's on my buy list. You'll see it's got my pattern that I trade over and over again. Salesforce.com, what a great lower left, upper right, almost tight pattern. Everything is green, great earnings per share growth, but that multiple scares me. But here's Momo, pull back to the 50. High close doji, good earnings per share growth. I think that looks great. This is what I like there. Back, specialty pharma, Acadia. I like the next three, so let's look at these. This is what top-down investing is. How do you go through 8,000 stocks a night? You don't. Find the top 10 groups and look at the stocks that are performing in the top 10 groups. Acadia looks a lot like Celgene's pattern. It's bottomed, it's going sideways, it's got momentum coming in, doesn't have earnings, it's a pre-clinical, well, actually it's got stuff on the market, it does have revenue, early clinical products on the market. I like that pattern, breaking above the 50 with a kahuna. I could set my stop probably below that doji, and that's a high close doji for followers of John. Endo has already broken out, probably too late for me. But OPCO looks interesting. Don't like its earnings per share at all, but I do like the pattern breaking above the 200 mobile breakout from a squeeze and a kahuna. And I'm not a big fan of Acorn. They've had some accounting and other issues. E-commerce discretionary. I love this group since I have three of them when I look further down. Netflix, where's Netflix doing? Netflix is pausing to refresh, sideways consolidation. I think it's going to go higher. Look at the earnings per share growth. Earnings are on the 16th. Oh, I should do this. No, I'm not going to do it. I was going to look at seasonality around that earnings. I will look at seasonality next week. Baba looks like Baidu. The Chinese stocks have been sick. Take a look at the FXI, I think, and you'll see how sick, sitting on their 200. Amazon, one of my larger holdings, going sideways, consolidating. Earnings are on 726. All right, the peanut gallery is telling me I got to hurry up. Etsy is the one I was going to point out. Another one that I have had a good week. Etsy is one of the stocks like Wayfair, Amazon, who may have to do some more tax collecting because of a recent Supreme Court decision. It caused a shallow pullback right to the 17 in a reversal. It raised its prices. It's going higher. It had a bottom gap up that still really hasn't violated. I like Etsy, even though it is expensive. In the essence of marital bliss, I'm going to go look at telecom carriers because the story here is dividend. I talked about dividends being something that are working right now, especially with that yield curve coming down. Verizon is broken out. Time to bought it was probably a week ago. Pays a 4.6% dividend. Earnings per share growth rate exceeds multiple. I like that. AT&T, much lower in the pattern. I like buying these off of bottoms. It doesn't mean it can't get lower. 6% dividend. You're buying it for one reason. It's dividend. And then the other one I want to look at here was CenturyLink. Even this thing, which has gone sideways forever, is maintaining its dividend, 23 cents, 25 cents, 18, that's earnings. 54, 54, 54, pays an 11% dividend. So I'm going to stop there very quickly. Let's just see how many stocks were to the downside or 83 groups to the upside. To the dark side, you only had 3. That should tell you about the strength in this market. And then lastly, I will share with you, for, as they say, shits and grins and no other reason, my buy list, and make a couple of comments. And then I'm going to go to my club for dinner. It was a great week. Got back about 10, 12 days ago. Did a little work. Then this week with the holiday was wonderful. Got to go fishing early in the week. Was on the boat with my lovely bride of 34 years. Today with some of our friends from Philadelphia. As you can see, there's a lot of stocks that I like. Let's just go by industry group. Biotech. You want a cheap biotech with a nice chart? Take a look at BioCryst. BCRX. Why did I like BioCryst? Because it's pulled back to the 50, has a mobile breakout from a squeeze, and a kahuna. That's the pattern I like. Trade that all day long. Oil exploration. I showed you Parsley. There's a number that I like, but they all have that need to break out kind of feel. WT Offshore. I thought this more services than a production company, but it had a kahuna, mobile breakout from squeeze, kahuna. Weekly bond will turn green. I like this one as well. Coming down my list, Alphabet, Facebook, and Twitter look good. We got some services, Helmerich and Payne and MRC Global. And then specialty apparel. I don't know if I'd ever go in one of these stores, but take a look at Boot Barn. Pull back to the 50, mobile breakout from a squeeze, 2 pocket pivots, a kahuna, and great earnings per share growth. Continuing on, Burlington Stores, a long-term winner. Pulling back, give me some momentum. This is one I call a pullback, waiting for a signal, but certainly been a growing in this group. Ross Stores gave me that signal on Friday, mobile breakout from a squeeze, just get above that PSAR dot. It has earnings, and even Urban Outfitters looks like it wants to go up a little higher. Here's that Acadia. I already showed that to you on the pharma side. And then I mentioned telecom carriers, especially CenturyLink and maybe Verizon. On that note, let's just do a quick check here and look at futures. And you could see that our fair value is -8. So I've got our -7.6. So I got to take my current futures on the NASDAQ and add 7. So we got about 10 points on the NASDAQ right now. And then as we just saw on the Dow, futures are up 34, S&P up 2.5. I call those pretty flat. That is going to do it for tonight. Thank you all. Have a great week. Sorry if the volume isn't good, the audio is not good. I could joke and say you get what you pay for, but hopefully you get a lot, and have a great week. Bye, everybody.